What's good, people, traders, and dedicated gold chasers? Welcome back to another video at the Modern Day Trader with your boy, Marcelino. Let's go. Today, we're doing a little bit of a case study on the past week on pound yen. And as I left off last week, you guys can see that we are looking at the 4H. We just want to know what intraday structures are going to do, and we go about that looking at the 4H so that we can get a higher time frame view on what market structure could potentially do, and then we start anticipating what price action can do on a session by session basis, day to day basis, or intraday basis, which is basically session by session. So as we left off last week, you can see that we had this swing of structure to the upside. We had continuous higher highs, so you can see that we broke these areas here: higher high, higher low, higher high, and then we formed this higher low. This dotted red line that you have here, this dotted red vertical line, that denotes the start of this past week. And so as you can see, the price action was in the formation of an uptrend, forming higher highs, higher lows, and at the time of market open, you can see that we were in the middle of the trading range that was most recently formed this recent higher high and this potential higher low. At the time of market open, we didn't know that this was a higher low. The higher low only forms once we have the new higher high being formed, right? So with that being said, what is our anticipation coming into the week? Our anticipation is quite clearly for a new higher high to be made, and just have the structural anticipation, a new higher high to be made. And then after a higher high is being made, once you start to see structural weakness in the market, or the bear is starting to step in, what you will then start to anticipate is that on a higher time frame, being the 4H, will certainly see a correction on the 4H, and that correction will then look like a trend on the 15-minute, a trend on the 30-minute, and you can start anticipating that possibly after midweek, if we get the push early in the week, the impulsive bullish push to the upside, you could possibly see later on in the week that correction comes in, and that correction on the 15-minute most certainly looks like a trend to the downside. We'll start to break lower lows, and then you start to form lower lows, lower highs, lower lows, lower highs, right? And that's our anticipation of market structure, and that's all we're going into the market with, is an anticipation that early on in the week we're going to continue and form the high of the week, and then around midweek, Tuesday into Wednesday, once the high of the week is formed, we will then start to potentially see weakness in the market via consolidations or shifts of structure to the downside, and then we'll see a trend on the lower time frame forming to the downside into a point of interest, or a correction on the higher time frame into a point of interest, for then the continuation to go to the upside once again. So with that being said, let's jump down onto the 15-minute and let's mark our sessions, right? I like using this session the session indicator, just because to me it shows as very clear and easily identifiable when the Asian session is and when the London session is. Although I know the times of Asian and I know the times of London, because London, obviously that's my trading time. I know it by heart, but it gives me a clear view of what actually occurred in that session without me needing to go mark it on the chart. It doesn't mean I'm gonna be using it as a trading tool at all. All it does is it's a visually appealing tool to clearly separate my trading times compared to what happened in the session before. Okay, so with that being said, we're coming into Monday, and as I mentioned, we have a magnetized area right here. And what I mean by magnetized area, to me, it's more likely than not that price action will get drawn into this high to create equal highs or even potential higher highs, as I mentioned, on the 4H time frame, compared to it pulling back to the downside. And why is that? Because we had already pounced, or from whatever this area is here, we formed this potential higher low, and you can see the price action is failing to continue to push to the downside. We have clearly found some type of support for lack of a better word, on in this area. And now what you can see is the price action is clearly pushing to the upside. So if we trade in London session, all we're looking for is for Asian session to clearly be bullish and push to the upside. Now what you can see is that Asian session, yes, whilst it was bullish, to me, it's it's not as clear as I would want it to be, just because you can clearly see that we struggle to actually push above these areas here, above these weak rejections. We struggle to do it, and then once we did get into it, you can see that we actually started to hate this consolidation. So personally for me, Monday session was a bit of a struggle on Monday. But what can we learn from it? What you can learn is that obviously we don't trade this because we're not even awake in South Africa at this time, right? We're not awake. We are able to see this when we get to work or whatever the case may be. When you get into the charts, you are able to clearly note that this is happening. Now, if you only trade in London session, unfortunately, it's the chances of you actually getting a trade right here is very low. You would have missed this point of interest unless you're actually using this as these lows as a low and then this swing high as a swing high on your fib levels. Then you could have potentially found an entry. But I think the person who is more likely to find an entry on this was once these equal highs are made. You could see that in New York session right here, or in Chicago Mercantile open times, we had a clear break and retest of that area. We had a clear push to the upside, this being our last low into the 61.8 area, along with another confluence of break and retest, clear candlestick confirmations. You can see that we had that 15-minute mitigating orders. So once we pushed up, you would have, with these two 15-minute candles, you would have probably seen the 1 minute shifting structure going back bullish after it shifted structure to the downside. We then came and mitigated orders with this bearish candle that's yellow, and then you can see we had a clear impulsive push to the upside, and that would have been the best time to trade. Unfortunately, it's not in my trading time, and we just step away from the market. It is what it is. So we had a pretty bullish day in the market on Monday. What do we anticipate when we get into the market on Tuesday? We either anticipate continuations, or if we start to see potential tops in the market that starts to get to a point where we're not anymore forming higher highs, higher lows, where you could potentially see a potential higher low formed, a missed higher high or missed double top, and then you can see the price action actually starts to take out that potential higher high. So in this case, what you can see, what I'm actually explaining, is these areas here, because you can clearly see we had a higher high, potential higher low, missed higher high, or missed double top, whatever you want to call it, and then you can see the price action shifts below that area. And those are the signs that you look for when you starting to anticipate the high or low of the week, right? Those are the signs that you start to look for when you start to anticipate the high or low of the week. But anyway, let's just step back for a bit and circle the block and come back to Tokyo session or Asian session. What do we see? We see clear higher highs being formed and higher lows being formed, right? For me, it's a bit tricky in trading this, because what you can see is that yes, we're forming higher highs, higher lows, and then we get that impulsive push out into London session. Now, I did place my fib, and unfortunately we missed it by a little bit, and thank goodness for that, because it would have been an L. And that's why you have your rules in place, and it just is what it is. How would I have traded this? I would have obviously been looking for buys for the most part. I don't think I would have used this as my point of interest, just because of the way price action had formed, pushing to the downside. You need to take note of internal structure. What does that mean? When you have a significant low and a significant high, you want structure to be pretty clean going to the downside. However, what you can see is that this was clearly an attempt to push to the upside. However, we failed, and then you can see the momentum shift to the downside. And those are key things that you need to take note of when you're actually looking to trade. It's not just about looking at this as your point of interest and saying, I'm going to trade out of here regardless of what happens or how. internal structure forms into my point of interest. That's not how things work, because what you would have seen is that if this was your point of interest right here, you can see the price action came back into it, we bounced off from it, and then boom, we clearly just said, fuck your point of interest, fuck all this noise, I'm taking it out. And it just is what it is. Then you can see that, as I mentioned, we're going into a little consolidation, and then after the consolidation, you can see the price action had actually tumbled. Now this, if you're a smart money trader, smart money concept trader, or inducement trader, this is actually a really good setup in my opinion. Not that I trade that way, but I know that a lot of people are looking for something like this coming out of Asian session. So you have a range going into Asia. Pre-Asia, you even have a range. You can see that the market is stuck between a high and a low, clearly definable high and a clearly definable low, right? And then what do you see? That Asian session is actually stuck in that range too. And then right after Asia, you see the price action grabs liquidity to the upside. We then immediately say fuck you and we push to the downside, and then this is then immediately corrected, and you can see the price action came all the way back into this point of interest before starting to push to the downside. Now this is where I'm saying look at your internal structure. So we have price action showing intent to push to the downside. We then grab liquidity, all these upside liquidity, we grab it, we say fuck you to all the buy stops and all the stop losses above these areas where the people are anticipating sell-offs already. We grab those things, we then push to the downside, we grab these stops below these areas here, we then come back, and what you can see when we come back is that you can see that price action starts to slow down on the pullback, right? We start to form this internal structure, which is really nice. And then once we do mitigate these orders, you can see that price action now pulls back. We failed to make a new high above this most recent high that came in to mitigate these orders, and now what you can see is that there's a clear shift of structure. This is actually the best day of the week to me, just because you can clearly see that we shifted lows. So now we're going into Thursday, we shifted lows, we're forming lower lows, lower highs, and on Thursday what you can see is that we formed this lower high into this lower low, and then quite clearly you can see that price action had pulled back into the 61.8 area in London session, and Bob's your uncle, mate. Bob's your uncle. 25 pip stop for about a 75 pip, and you have a 1 to 3, and boom, Bob's your uncle. You can see the price action once tapped in, never look back. And why is that? Because you have clear structure to the downside, and upon clear structure to the downside, you can clearly see that price action is forming lower lows, lower highs. And with that being mentioned, our formation out of Asia and into London forms with clear structure. You don't have to ask yourself, is this the low, is this the high, is that the higher high, or is that the lower high, lower low? You don't have to ask yourself that. It's so clear. You can I think a 2-year-old can see and point that from where Tokyo starts in this red block, you know where the most recent swing high is, and you know where the most recent swing low is out of Asia, and then you just plot your fib and you place your sell limit, and Bob's your uncle. Then what you can see is price action had actually gone into some consolidation of sorts. We then pushed to the upside, and just because of the way price action was falling out of Wednesday into Thursday, I wouldn't trust this, especially on a Friday. If you did take this, you don't want to trust giving profits back to the market in any type of way. Also, I don't like, there's no clear impulse. This is an impulse, but if you're going to consider this an impulse, where do you see price action actually breaking structure? You're going to say, okay, this impulse broke structure, but this is your low, so that means your 61.8% is probably going to be all the way down here, which is not going to get triggered in London session. And that's our case study for the day. We would have had one trade potential 3%. And to be honest with you guys, I can't wait to get back into the markets. Just looking at these market conditions, yes, it's literally all about discipline. Taking 1 to 2 trades a week, not a day, 1 to 2 trades a week, making sure that those trades are the most highly probable trades that you can take, saving your capital, and then when you do take a trade, just making sure that it meets all your rules and not revenge trading, not doing anything else, because you do get a week or two where price action might be quiet, and then you get a brilliant week where you might make 3, 4, 5%, and then it's just about taking advantage of those weeks where you might get 3, 4, 5%. So with that being said, guys, let me actually do a small analysis before I let you guys go. Let's remove all these drawings, go back onto the 4H time frame. Let's clear these sessions, because the sessions actually don't mean shit on the higher time frame. We're not looking for the sessions on the higher time frames. All we're looking for from a higher time frame perspective is direction. What could we anticipate from this week? And so, as I mentioned, these higher time frame levels still stand, and we can anticipate that as long as price action holds these higher lows or swing highs, then you can anticipate the price action will continue to the upside. So as long as price action holds this last higher low, you can still anticipate that this trading range right here is valid, and you can still anticipate that price action still needs to come all the way into these points of interest, and then you can anticipate the price action will then start to shift from there. Now, if price action was to break these lows here, then what you will start to do is wait for a pullback, wait for price action to break the new low, and then you can start anticipating that price action from a high time frame perspective will continue to the downside. With that being said, I think that from a weekly perspective, if you just look at the candlestick, I think the candlestick closed bullish, and as you can see, we closed bullish, but this is more of a pin bar type candle. So my anticipation is that early on in the week we're going to push to the upside, form the high of the week, and then you'll basically see that price action, or potentially even do something where we're going to push to the upside, come down, like push to the upside on Monday, come all the way down into a point of interest, form the low of the week Tuesday, Wednesday, and then potentially expand to the upside. Now it could be alternatively where we push to the upside, form the high of the week, and then what you will then see, if we form the high of the week Tuesday, Wednesday, then you will potentially see that price action will eventually shift from a 4H perspective to then break this structural level at 190. What's this? 190,700. So those are the two options that I'm looking at. But right now, from a 4H perspective, price action is still bullish. So my structural anticipation is that price action will continue to the upside, and it's more likely that you will find you will be profitable taking buys than it is taking sells. Now you can still take sells into the point of interest, or even if price action breaks structure, but from my opinion, once we do get into these key areas in the market, in these levels here, you can then start to anticipate buys once you have the confirmation on the lower time frames. So from your boy Marcy at the Modern Day Trader, I hope you have a lovely week. I hope you have a profitable week, and I hope you have a productive week, right? And so please don't forget, if you made it those far, to hit the like button and hit the subscribe button. And also don't forget that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. From your boy Marcy at the Modern Day Trader. Peace out, man.